I think it's really driven by the property market in China, the relatively lower levels of demand that we're seeing in China at the moment. That will eventually recover. But how it's manifesting, of course, is these large volumes of steel exports that are coming out of China. They're having a dampening effect on margins and prices.
How significantly did China's steel exports, along with its subsidies of steel products, weigh on BlueScope's half-year result?
Oh, I think we're now in our third year of what we would call bottom-of-cycle spreads, which is really driven by those large amounts of exports that are coming out of China. I think it's really driven by the property market in China, the relatively lower levels of demand that we're seeing in China at the moment. That will eventually recover. But how it's manifesting, of course, is these large volumes of steel exports that are coming out of China. They're having a dampening effect on margins and prices, and that's the impact that we see at the moment on the Australian business. So in that context, the performance of the Australian business has actually been fantastic.
Is BlueScope going to be able to increase its performance in Asian markets on the back of the federal government's imposition of tariffs on some steel products from China?
I think we've already got a pretty good trade remedies regime in this country, so I'm not sure that we'll necessarily see a fundamental change in that area. I think there's some good reforms that are being made, but again, all we ask for is a level playing field. I think the government's doing a pretty good job in what we have at the moment.
On the other side of the coin, how significant were the gains from BlueScope's North American operation as a result of the tariffs the Trump administration has put in place?
I would actually say that tariffs have a peripheral impact on North Star. North Star is one of the highest performing mini mills in the US. It's fantastically located. Freight is everything, so it's competitively advantaged in the sense that it's very close to its customers, it's very close to its source of materials. It's a highly productive asset. It's got a fantastic culture. So yes, tariffs can have a broader impact, but it doesn't really compete on tariffs per se.
There are reports the US is considering rolling its tariffs on steel back. What would be the likely impact for BlueScope? And how difficult is it to run a steelmaking business in the era of Donald Trump?
Oh, I think it's a bit of a peripheral issue. I saw some of those reports as a bit of speculation floating around. I don't think it's actually directed at what is referred to as the 232 tariffs. I think it's actually directed at what's referred to as derivative products. What it seems to be indicating is that products that are coming in, so finished products that come in with relatively small amounts of steel might have a lower level of tariff, and then there seemed to be speculation that products that had a much higher steel content, like steel pipes, would have a far higher steel tariff. But again, it's a bit of a peripheral issue because North Star itself doesn't really compete on the basis of tariffs. The reality of being in the steel industry is you deal with an awful lot of moving parts, whether it's tariffs, whether it's foreign exchange. It's just the ebbs and flows of the steel industry. At the end of the day, what you have to have is a good product and a highly competitive cost base, and that's what we have in North America.
This is your first results presentation as CEO, and shareholders are seeing significantly higher dividends. Is the company delivering capital to shareholders in a bid to defend itself as a takeover target?
I think there's been an interesting passage of time here whereby we've been going through a fairly significant capital expenditure program over many years. We're now coming to the back end of that capital expenditure program, and as we ramp down the returns, we're looking to ramp up the returns. As we're looking to ramp down the spend on that capital expenditure program, we're looking to ramp up the returns to our shareholders, and that just happens to coincide with the timing of the CEO transition. So Mark Vassella, my predecessor, put a lot of heavy lifting into the investments that we've made, improving the resilience of the business right across the portfolio, building out the growth options, particularly in North America. I just happen to be the beneficiary of that as we've gone from that period of very heavy CapEx, which quite frankly has been going on for probably 4 or 5 years now. As we come into the back end of that CapEx program, there's a natural reset in terms of the earnings base that we have available to us and the capacity that we need to hold on the balance sheet, and shareholders are now the beneficiary of that. That's why we're targeting to put $3 a share into the hands of our shareholders this calendar year.
What do you say to analysts who've questioned whether BlueScope itself has overvalued the company's worth, specifically in relation to the now rejected SGH Limited and Steel Dynamics bid?
Well, that was the view of the board and it was the view of our major shareholders. So we have a very clear view on the fundamental value of the company. Of course, we remain always open to all options, but the bid at $30 fundamentally undervalued the company. That was the view of the board and that was the view of the major shareholders.
BlueScope is collaborating with a number of international partners in relation to the Whyalla Steelworks sale process. Could you envision a takeover or merger proposal with those parties?
I think the Whyalla process is very much a separate matter. It remains an option for us. I think at the end of the day, though, the option that sits there is one that has to make commercial sense for our shareholders.
And so is Whyalla looking like a viable proposition? When will there be a decision?
I think Whyalla is a quite complex matter that's still being addressed. I think there's a lot of water to go under the bridge. At the end of the day, the interest that we have in Whyalla is fundamentally around the quality of the ores that are sitting there. They have the potential to be used in the current mature form of DRI or direct reduced iron technology, that's low emissions iron making. That's why we're interested. That's why the other steelmakers are interested in working with us. So it remains an interesting option for us. But at the end of the day, it has to make commercial sense. There's a lot of work to be done to understand the economics. There's a lot of factors that come into play. There's a very significant amount of capital if we were to ever develop direct reduced iron at Whyalla. There's a lot of capital that's required. But just as importantly, there's a number of quite significant policy factors. It's where you get the gas. For direct reduced iron production, you need a very significant amount of gas. Of course, you've got to compete against global players, so it's got to be cost competitive gas. You've got to have cost competitive energy supply, and you've got to think about how all that capital is paid for. And this is one of the big challenges that's sitting out in the global steel industry at the moment. There's certainly a big push on to understand how we can transition the industry to lower emissions iron and steel making, but fundamentally there's a lot of capital required, and you have to be prepared to pay for it. And at the moment, the concept of a green premium is very, very niche. And so there's a long way to go in terms of understanding what a viable business case looks like.
The new Liberal leadership has raised the nuclear question in relation to Australia's future once again. Is that a good thing? Should we be discussing it?
Oh, look, we are completely agnostic when it comes to the sources of energy. What is really important for manufacturing in this country is that we have cost-competitive supplies of energy, and that's one of the areas that we've been very vocal on. Mark, my predecessor, was very vocal on this issue. We've had really good engagement with government, particularly around gas reservation. I think the report that the government put out, the preliminary report that came out, I think it was at the back end of last year, was a fantastic step in the right direction. There is a lot of detail that needs to be addressed in terms of understanding how this exactly will play out with gas reservation, but I think that's we're making good inroads there. I think that is the primary focus that we have at the moment in terms of energy reform in this country.
Tania Archibald, thank you.
Thank you very much.